Yeah, I mean,
make that
in this case,
case?
you know, let's see, you have, with Ambase, they invested, you know, 55 to 57 million in this project. There will be outside financing to complete it. And I think Ambase is trading for roughly about 40 some million. So that gets you, you know, your investment, even if you just view it at the capital contributed. Plus you have an extra, you know, 20 million in assets, which are primarily cash, but small bit of their own office building in Greenwich, Connecticut. And so you look at that and you're saying, okay, you know, I'm buying, you know, 75 million in assets, and I'm paying, you know, 45 million for that today. So there's protection there. And then the question is, you know, what return are you going to get on those assets? Well, on the cash, you're not getting much of a return at all. On the real estate, there's probably some appreciation there based on what they're carrying at and how long they've held it. And then the question really comes down to what sort of return do you think they can get on this office building? And we think that, you know, looking at comparable transactions, that 57 could easily, you know, at a reasonably conservative IRR, could over the course of the next maybe 5-6 years, you could easily see a double in that, which would represent, you know, in excess of the current stock price being returned. At that point, the question becomes, do they get credit for that on a valuation perspective if it's a one-off deal, or do they effectively have to become a real estate development company and convince investors that, you know, they can invest in these projects on a going concern basis, one after the other, and then they'd be afforded a multiple that would be in accordance with the going concern, which would be higher than, you know, which would not be a discount to book. Whether they get that, I don't know. That's not baked into our assumptions. It's basically looking at it and saying, you know, we're paying a discount to sort of cash assets and investments, and we think there should be a return on those as well.